It's Take Back Friday, everybody. This is Frank. I'm here with my main man, Dex from PulseWave Trading. How you doing, buddy?
What up? What up? Take Back Friday, folks.
Yes, it is Take Back Friday on a particularly crazy, wacky week, and in America. So we had a great show last Friday, Dex. People loved you answering their questions. So we said we'd do a part two. I was hoping that we'd get it in the earlier part of the week, but here we are. And we've got some great questions from our PulseWave Trading members. But also, if you're live in the chat, got a question, throw it in the comments. We'd love to take a crack at it. As you guys know, Dex has been trading 20 plus years, but not only that, he's got this amazing PulseWave Trading, PulseWave price trigger reports that he's made available to the world through pulsewavetrading.com. And so we're going to be talking about that. But most of all, we're taking your questions today. So how was your week trading, Dex? What were your highlights of this crazy market, this crazy world this week?
The stock index futures. Those were the big highlights. And then I can't forget the gold short.
Right.
So that was a pretty good one.
Nice. Solid. All right. Let's see. Andrew, since he put one in the comments, I'm still gathering my other questions, but let me grab this one from Andrew to get started. So, hey, Andrew. So he says, Dex, I know you're going over gaps today. I have some stubborn Bitcoin truther friends who don't believe all gaps must be filled for Bitcoin. If you can speak specifically to them so I can share, I'd appreciate it. That's a great question, Andrew. I love that question. So, stubborn friends saying some of the Bitcoin, I guess there's some Bitcoin gaps that haven't been filled, I'm assuming.
Right.
What do you think about that, Dex? Going back for old gaps when you've seen such a huge move in Bitcoin. Any thoughts? I don't know off the top of my head the particular gaps that he's referring to. So maybe.
All right. That is a loaded question, and the response is going to be a little lengthy. So let me take my time with this one. All right. First and foremost, the crypto markets are different than any other markets on the planet. The key here is to understand what the makeup is. The number one takeaway you should always keep in mind when you're talking about the crypto markets is that we have Bitcoin and then we have everybody else. Bitcoin is Bitcoin. Everything else is an altcoin. Everything. Okay? Now, some would take issue and say, Bitcoin is Bitcoin, but Ethereum is Ethereum and Litecoin is Litecoin or whatever. I get your argument. You can make an argument that Ethereum can be just as important, if not more, than Bitcoin. I understand all that. But for all intents and purposes, we're talking about markets here. There's Bitcoin and then there's everyone else. You got to understand that, okay? There's a reason for that. Okay. I'm going to give you the market response, and then I'm going to give you my own opinion. Okay? This is my opinion. My opinion first. I truly believe that the entire crypto universe is not and never has been truly decentralized like people think it has. Furthermore, I believe that the crypto market was created by the central banks, Federal Reserve, United States of American government, whatever you want to call it. I do not believe that the person that they say created it is the one that really created it. There's been no proof or evidence to point to that he is the one that created it single-handedly. I believe that it was designed to get people acclimated to a cashless society. And they knew that if people thought that this was something organic, of the people, by the people, for the people, decentralized, that they would grab onto it, gravitate toward it, and hop on board. Now, I know people who are listening right now are going to say, this dude is crazy, he doesn't know what he's talking about, he's an idiot, right?
It's crazy.
All right, let me bring you my evidence admissible in a court of law.
I love it.
Here you go. Most people do not realize that the markets have always been an arm of the intelligence community. I'm going to let that marinate for a minute. The markets have always been an agent and or arm of the intelligence community. So much so that before some of you were born who are listening to this right now, they were thinking about making a specialized new futures contract to track down, locate Osama bin Laden and other wanted terrorists, and even extend it to the FBI's most wanted list and a host of other things. I kid you not, you can Google that. These are facts. Okay? They put a stop to it immediately. They said, no, we can't do that. It's a matter of national security. Now, here's what you need to take away from that. The fact that the exchanges were really looking into it, and the SEC and the CFTC, and were getting ready to green light it, should tell you all you need to know. The rationale behind it is that the markets were always the smartest place and the chief intelligence antenna. They knew that traders are the most informed and smartest people on the planet. They knew that. That's why they wanted to make a futures contract for it. Okay? Now, with that being said, here's my second piece of evidence. That was Exhibit A. Here's Exhibit B, and then I'll leave it with that and let you think on it over the weekend. You ready? Here we go. Let me ask you, how many crypto futures contracts are there? We got about 3,000 cryptos, but how many futures contracts are there?
Is this a rhetorical question? Or
I'll wait.
Wrong answer.
I'll wait. How many are there?
Because I already know, but I want to see if the people in comments know.
All right. The answer is one. There is one.
There's one.
And which crypto would that be?
I'm thinking that's for Bitcoin.
There you go. Ding, 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 ding. We got a winner. Why do you think that they would put forth, and they did it rather quickly, almost like overnight. Out of nowhere, you had this Bitcoin futures contract.
Right.
Why not Ethereum? Why not Litecoin? Why not Dogecoin or any other coin? Because Bitcoin is their puppy. It's their baby. Why do you think the Bitcoin cash market now is affected by what happens in the Bitcoin futures market? Whenever I talk on the end of day report and show you gaps that need to be taken care of in the futures market, why does it always come to pass in the Bitcoin cash market? If Bitcoin is so decentralized, how does that happen? You can't explain it. And then I'll leave you with this.
They sure do work closely together, the futures and the cash market.
Yeah.
Yeah. And to be clear, he's not talking about Bitcoin Cash. He's talking about Bitcoin as it's traded as Bitcoin.
Right.
Yeah.
The cash market, not Bitcoin. Oh, yeah, I forgot there's a Bitcoin Cash token. I'm not talking about that one. I'm talking about Bitcoin. When I say cash market, I'm talking about, when you go on BitMEX or wherever and trade your Bitcoin. That's what I'm talking about. The cash market. Yeah, actual Bitcoin. So I'll leave you guys with this. I got so much hate when I did my documentary, There Is No Collapse. And then I did the follow-up, the Federal Reserve versus Bitcoin and the central banks versus the blockchain. And that was back in 2016. And I exposed that the government, the federal government, was operating in that space in cooperation with other governments, foreign governments. And that even big Wall Street money was starting to pour into those markets and even take them over with their algorithms. People laughed me to scorn. And then breaking news, here we are, all these years later, and now it's commonplace knowledge. And now it's old news now that countries are building their own blockchain and their own cryptos, and even putting their their currency on the blockchain and on the crypto. But I exposed it back then, and everyone laughed at me. Didn't give me no love for that. So to answer your question, the situation is as follows. Cryptos in general have no gaps. There is no gap in any cryptocurrency, including Bitcoin. Gaps enter into the conversation because of the Bitcoin futures contract, because it does not trade 24/7 like the crypto market. Bitcoin futures trades on a normal schedule like all other futures. And it will close today at 5 p.m. Eastern Standard Time, like all other markets, except for crypto. And it will reopen Sunday night, 6 p.m. Eastern Standard Time, like all other markets. Crypto never stops. So there are never any gaps in the crypto market, except for the Bitcoin futures, because whatever Bitcoin does over the weekend, if it moves significantly higher or significantly lower, is going to be reflected when Bitcoin futures open Sunday night. There's going to be a gap on the chart. And then like clockwork, at some point, that gap will be filled at some point in the future. So gaps never existed in crypto until the advent of the Bitcoin futures contract. So I told you it was a long answer, but that is the answer.
So the short answer then to Andrew's question is they will fill?
Yes.
Or just on the contract?
The Bitcoin futures gaps will fill, yes.
Futures gaps will fill.
Yes.
But it doesn't necessarily go lockstep. So are you saying the cash market won't necessarily? Well, there are no gaps in the cash market.
There's no gaps in the cash market, but the cash market will respond in kind to the futures market.
Gotcha. Okay.
That's my point. My point is that the Bitcoin cash market is now affected and even driven by the Bitcoin futures market and vice versa.
Got it. Okay. Yeah. All right. I see how it all ties together then. So
just like the stock index, the stock index cash, is affected by and moves with the stock index futures.
So what it means is, as much as you want Bitcoin to be decentralized, because of the futures contract, it's tied to big money.
Yes.
One thing we could say.
Yes.
So how would that impact? I mean, we know how it impacts trading. You're gonna watch it on trading. How would it impact hodlers and holders? What do you think their plans for Bitcoin is? Just a quick. I know you can go on forever about that, but just a quick one. What is what does that mean to people who hold Bitcoin as an investment, the way people hold gold?
Well, that's different. All right, we're touching on information and situations now that are a little bit more complicated than that. It's not so easy of an answer, and I'm gonna tell you why. When you talk about traditional stackers, people who hold precious metals, gold and silver, they hold it physically in their hand. All right, they can pull it out at any time and hold it in their hand. They own it. It's in their possession. That's not the case with a digital asset. What do you mean you're holding it? It's digital, so it's not tangible at all. There is no tangibility in that. Okay, so it's not the same. You can't compare the gold and silver market to the crypto markets. Now, I understand that there are people who are not stackers. They don't hold physical gold and silver, but they may hold, let's say, ETF like GLD or SLV. They may even hold some of the Sprott ETFs. I get that. Sprott is backed by physical metal. GLD and SLV are not. So those technically are not the same. Those will be considered traditional investments like holding IBM or Microsoft shares. All right. It's a difference between the physical market and the paper market. There is no physical market for crypto. It's all paper. That's my point. It's all paper. It's all digits on the screen. It's no different than the US dollar. technically speaking, crypto is fiat, whether people don't want to admit that and talk about that, but it is, because it doesn't have any, it's not backed by anything physical.
Mm-hmm.
See what I'm saying?
Yeah.
It's not backed by anything physical. It's not, I can go on AppMax and buy gold or silver right now. I may have to pay a $400 premium, but I can do it if I wanted to, you know what I'm saying? And then it will be mailed to me and I will have physical metal in my hand.
Right. Yeah.
So if anything happened and my house caught on fire, God forbid, I can still run out the house with my metal in my pocket. But if all of a sudden the internet crashes all over the world, your Bitcoins and altcoins are gone. You dig what I'm saying?
Mm-hmm.
That's fiat. Fiat can become worthless at some point. It's possible. But with a commodity / currency like gold and silver that has been traditionally considered money for over 5,000 years, at some point, I'll still be able to buy some things. I'll be able to barter and trade with that.
Mm.
You won't be able to trade if you going up to me with an IOU that you wrote on a piece of paper saying, whenever the internet comes back online, I have 50 million Bitcoins, so I will trade you 1 Bitcoin for a loaf of bread. Someone's going to say, get out of my face with that piece of paper you got and take it with you. You see what I'm saying?
Yeah.
Yeah. So it's a difference. We're not talking apples to apples when we're talking about cryptos and precious metals. Precious metals is just a different animal because it's a paper market, but it's also a physical market. Crypto, the US dollar, it's not. Even stock index futures are not technically commodities because they settle in cash.
Mm.
Anything that settles in cash is not a commodity, and it's not tangible. It may be fungible, but it's not tangible. You have to be tangible. You got to be physical. Like I can trade soybeans right now, and they can deliver 5,000 bushels of soybeans to my front door. So, regardless of what happens to the internet, I still got my soybeans or my corn or my wheat. I can still eat.
Mm-hmm.
I can eat my corn. See what I'm saying? It's different. It's just a different thing. So I'm not saying that crypto doesn't have its place. It is still a fiat in that it's not a physical commodity. It's not backed by anything, but it doesn't mean that it's worthless. Obviously, it's worth. Bitcoin does have value. So it's just a different animal. I mean, we're stepping into the future here. We haven't been here before.
Right.
So this is just something totally different. And if I might real quick, I just want to share my screen with you because the other part of that question was, does the Bitcoin futures gaps always fill? And I want to just show you real quick that yes, it does. All right. Regardless of how you think or how you feel about it, facts are still facts. All right. Facts are still facts. All right. So I'm trying to make it as big as I can so I can show my screen here. All right. So the first example that we have, when I make it bigger, I have to move my thing around. All right. So you're going to see some pretty impressive gaps. All right, so here's one. Here's the first one here. All right, so on this bar right here, all right, you see this bar right here. You guys can see my cursor, right? Okay.
Yep.
So this bar right here on February the 20th of 2018, we gapped up on the open, right?
Mm-hmm.
Prior day's bar is down here. What did Bitcoin do? It came down and it filled that gap, closed that gap, and then went right back up. But wait, hold on. On March the 5th of 2018, we gapped up again. What did the market do? It came down and it closed, filled that gap. All right, let's look. There's so many opportunities. We could go on forever, but I just want to show you that they fill gaps. Here we go. On April the 2nd of 2018, we gapped down. Here's the gap. What did we do? Following day, we came up and we filled that gap. Did we not? Here's another glaring one. Here's a gap right here. We had this gap. What did the market do? It came down, initially filled the gap on here, on this bar, but then waited a while and came down, and we really closed it and overshot it. But then in doing so, we created another gap on the way down right here. You gapped up. What did the market do? Came down and it closed and filled that gap. Here's another one on the far right-hand side of the screen. You can see the market gap down here and stayed down for a while. You can say, aha, see, it didn't fill the gap. See, it doesn't always fill gaps, Dex. You were wrong, was I? Well, how about here? On July the 17th of 2018, it finally filled the gap that was done on June the 11th of 2018. But hold up, wait, there's more. There's a gap here. We gapped up here, right? On July the 2nd of 2018, right? What did we do? We came down here and closed it on July the 13th of 2018. Okay, those are old examples. What about new? See, it's a new day now. We're in a new market now. What about the new gaps in the new day? Okay, well, let's see here. Let's find a couple examples for you. All right. You probably won't like these, but hey. All right, so here's a gap here we did on October the 12th. Market came down. Let's see, this was, let me break it down. Okay, this is 11,205. All right. All right, this one here, make a note of this one, October the 9th. So far, we haven't filled that gap. That was in 2020. Had not filled. Market's going a long time now without filling the gap. We did another one here, December the 14th, 2020. We got another one, a glaring one right here. This one here was December the 28th, but then the following day we closed it on December the 29th, came down here and filled that gap. But you still got old gaps way back yonder in 2020 that are much lower that haven't been filled yet. So at some point, this is going to end badly. The market is going to come down, reconcile the gap that it committed on October the 12th of 2020. So you may want to make a note of that. That means Bitcoin's going to have to drop below 11,280 in order to satisfy it, because it hasn't done so. Right. It also didn't do the gap here from October the 19th of 2020. And it needs to come down to below 11,470 to fill that gap. And then you got the last one it did here on December 28th. You could call this a gap fill. That would be official. But, you know, the markets like to overshoot. And because it has to go back down to 11,000, that's a big way to drop. The higher you go, the harder it's going to fall, ladies and gentlemen, at some point. So, yes, I've shown you several examples where Bitcoin futures did fill the gap. In order for that to happen, that means the Bitcoin Cash had to move with the futures in order for that to happen. I rest my case.
Yeah, excellent.
You may continue.
Yeah, a lot of questions. So I've got a really good one here. That's a great question, Andrew. Here's a great one. Hey, I think my biggest this is me reading the question now. I forget who asked it, so it's anonymous. I think my biggest question is, as a new trader, starting with about $2,500 and in parentheses he puts, to prove to myself that I can turn that into something. Where should my focus be? I understand this answer depends and is largely unique, but for a best bang for the buck, do you think cryptos are the best place to start? I can appreciate the equities, but I don't really understand where to start or how or which 4 to 5 instruments to focus on. Any guidance would be greatly appreciated. So basically asking, what's a good beginner's watch list? And you know, where's your best bang for the buck if you're a new trader? Of course, with you know, our reports cover just about everything, especially if you have a pro membership. So you know, that can create a little bit of stress. What do I focus on? So what's your thoughts? A top 2, 3, 5 list to start on, and what markets have the biggest opportunities these days?
Well, that's a great question, because I actually designed the system to work with people that have small amounts of equity to work with. So that's a great question. You have multiple answers, actually. You could pretty much start just about anywhere. But for that size of capital, you would be better served in the micro forex market or in the crypto market, believe it or not. So you could like open an account with Oanda. I like to pronounce it as ONA. They let you trade micro forex, which is great. That means you can really manage your risk a lot better. You can trade for as low as a penny a pip until you get, situated and comfortable with trade execution. And then you can bump up the leverage. You can control that, which is great. You could also do cryptos. Cryptos, with that size of account, you can also trade very small amounts. Get your feet wet, get used to executing your trades, and then when you get comfortable, you can ratchet up, the leverage with that too. So I think that the crypto market and the micro forex market are perfect places to start for people that have small amounts of risk capital.
Yep. Our Partner 21 membership, $49 a month. You get 10 tradable reports. Very cool place to start for anybody who's looking to get started. All right, good one, Dex. Next one. Can you define? Actually, this one is something we covered a lot. I'll come back to it. Oh, I promised this one. So I had answered this one last week, and there were some great follow-up questions, Dex. So this is an example of I don't know what you would call it, but the member is saying, you got a mixed signal here. You got a rally alert with a downward momentum. So over here, you have a primary rally alert, expect higher prices. But then on the trend momentum, we have the markets trending downward with strong negative momentum. So the question there, and I talked about this last week, is how to deal with this. Now, the quick answer, if downtrend momentum, bottom to be placed, that means look at the trend momentum and trade accordingly. But why the question from a member was, why would we get a rally alert if there's a downward negative momentum? Why would those things be conflicting? Can you explain the difference between the two of them?
No, I absolutely will not.
Next question.
So I think I heard my mother calling me. No, all right. That's a very good question. Okay, so let me break that down. So basically, when we talk on the reports, we have our I think I need to redo some things. Listen, you have exposed a flaw in my designing of the report.
Lies.
All right, so here we go. I need to rename positive and negative momentum columns to rally alerts and crash alerts column, because that's really what it is. The trend momentum column needs to stay where it is. That way you won't be confused, okay? The trend momentum column gives you what the current trend or lack thereof is in any given market at any given time. Mm-hmm. So it lets you know if the market is a bull market or bear market, or if it's a bull market that is in retracement, or a bear market that's undergoing a corrective retracement. Then it also lets you know if you're in the cumulative cloud of death. That's what the readings are for the trend momentum column. The other two columns, the positive and negative momentum columns, need to be renamed rally alert and crash alert columns. That's what that needs to be renamed. So I will get right on that. Another thing that I fixed too is that there were other readouts that were coming from the report that are no longer valid, and it never occurred to me that I needed to remove those. So the report is really like mad simple now. So yeah, I'm gonna correct that. But basically, it all boils down to this. If let's say we'll just use GameStop as an example. GameStop was in a bear market forever, right? Until last week. So because it was in a bear market, the readouts you would have been getting would have been saying that in the trend momentum column that you're in a locked-in bear market with negative downward pressure, right? Mm-hmm. But then the readings would have started changing. As of last week, they would have started changing. You would have got a rally alert in a bear market. What does a rally alert in a bear market normally mean? It means that the market is bottoming out and preparing itself for a run, for a corrective bounce. Yeah. That's why you will get a rally alert in a bear market or get a crash alert in a bull market. And that explains that right there on the screen. If you look at it, you see you're in a bear market, right? On the right hand side under the trend momentum column, and then on the left hand side, you got that rally alert. Again, it's letting you know that the market could be bottoming out, and it says it right there.
Yep.
It says short-term bottom could now be in place. That's why that's not a conflicting signal. It's actually a complementary signal. It's saying, although you are in a bear market, if this particular market has been in a strong downward market with negative momentum behind it, making it hit new 52-week highs on a regular basis. I mean, 52-week lows on a regular basis. But now that has come to a stop. You need to now look for this market to pop and get ready to get out of your shorts and reverse into long positions. That's basically what it is saying to you when you look at it.
Yeah, excellent. Yeah, it's talking about two different things. So a rally alert can be speaking of, again, possible action in the next day, 2-3 days. Whereas the trend momentum is talking about what's been happening for quite a while, whether it's a week or 2 weeks or months with that particular instrument. Is that another way to say it? That they're just talking about two different things. One is talking about the price action coming up or in process. The other is talking about the profile of that particular instrument. So if it's been up,
that's exactly what I'm saying. That's exactly what I'm saying.
Different things. Yeah, it's
right.
Different things. But one thing that I shared with the member was, even if you have a rally, let's say something's rallying over the last 3 or 4 days, that doesn't mean that it's necessarily trending up, because it hasn't. It takes more than a few days to qualify as something being bullish. It may still be bearish in its overall outlook, and yet it can have a rally. So that's just something to keep in mind. So if I want to trade something that has an overall profile, an overall picture of being bearish, but there's a rally alert, for me, that means I'm going to be cautious because it's changing directions. It's not continuing with the trend. It's bucking the trend. And so I'm just going to look at that with a different eye. That's kind of my take. And that's
basically your counter trend trading.
Yeah.
If you're buying in a bear market, it's called a counter trend trade. If you're selling in a bull market, that's a counter trend trade.
Yeah.
That's correct.
Have your eyes open. I mean, we always do. So it doesn't, you're always cautious trading, but I just say, it's a wackier situation to be in. So you got to know about
it. There you go. I mean, that's pretty much what we are actually saying. We're saying that this is exactly what that is. But here's the other side of that. If you catch a rally alert in a bear market that's bottoming out, if that correction turns into a bull market, that means you got in right there at the bottom.
Power of the pulse waves.
That's what I'm trying to say. That's what I'm trying to say.
Yep. All right, next question. If there's a time, yes, there is time, my friend. I can just say, I don't remember who asked these questions, but all of them were super great. And all of them were asked in a very friendly manner. So if there's a time, if Dex can explain how he sets targets when entering a trade, that would be great. I notice he uses moving average or pointers when setting target prices. So there's kind of a follow-up to this about pointers, but let's start with that question. How do you set your targets, or do you set targets? And really,
I do not set targets. 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 I don't know how high the rally is going to run, and I don't know how low the bear market is going to go.
Mm-hmm.
However, this is something that I do know. If you get a rally alert on something that is trading way below the trend line resistance, then the trend line resistance is going to be the immediate target. If you are trading way above your trend line support and the market is falling, then the immediate target for that move is going to be the trend line support.
Mm-hmm.
The markets always like to come back to their trend lines. So that's how I determine it. So I know that the trend line is always the initial target, followed by the Kumo cloud as the secondary target.
That's helpful. Very good. Very cool. Now, I'll tell you how I would answer it. And I don't say that like, here's my answer. I say it like, Dex, is this a good answer? My answer, that's very helpful. But I mean, using the POP method, which is our proprietary method for managing positions, that's one easy way is setting your pop. But now with what you're saying, looking at the trend line, looking at the Kumo cloud, could that be a way to help you pick which of the options? Because there are options in the pop method. You're still making your own decisions. It's not like, oh, here's what Dex would do. You're still
Right.
choosing your strategy. You're still trading according to your personality. It's just that pop gives you some smart options. So using the pop method, do you kind of combine those two? Do you look for, you know, which one is closest to the trend line, which one is close, you know, which options? Does that make sense?
Two different things.
Okay.
Profit targets are different than managing, you know, moving your stops.
Right. Okay.
Moving stops is managing loss, trying to manage loss and capitalize on any gains that are available.
Mm-hmm.
Target objectives just means where you believe the next support or resistance area is going to be. So all you do, if it looks like the market is hitting that or getting close to that today, then obviously when you're popping through, you're going to use the more aggressive pop method instead of the conservative pop method.
Okay. Mm-hmm.
I'll tell you this, all week long, I've been using the aggressive pop method.
Meaning more aggressive at taking profits or more
Yeah.
aggressive at staying in? Okay.
No, more. Yeah. The aggressive pop method is designed to, to basically walk away with more profits. The conservative pop method is designed for when you think that the market's in a longer term trend or a longer term trend is developing. And so you want to give it an opportunity. You want to stay in it longer. Generally, this is how I determine which method to use. I'm going to use that aggressive method. If I'm in profit, but I don't have that much profit, or I'm in profit and the market has really ran like really good that day, then I want to go ahead and take my profits and get ready to re-enter the market if need be. But if I've been in a trade for a minute and it's just been moving like gangbusters, then I'm going to use the conservative approach because I have so much profit built in that I can afford now for the market to just do its thing and be volatile and keep me in it. And I'm still walking away with my lion's share of profits. So I'm not concerned about getting stopped out.
Right. Nice. All right, cool. One more question for today. Then I got to drive my daughter to work.
All right. And that's on the pointers, right?
This is on pointers. So he says, can you define bearish and bullish pointers? Also, take back Friday. I'll give that as a follow-up because it's a really good question. Talk a little bit about bearish and just briefly because we've talked about this a lot, if you don't mind.
Bullish and bearish pointers. I cover that every day in my end of day report. A bullish pointer is a bar where the top is pointing up, where the high is, and on the bearish pointer there's a large pointer down where the low is. That's what a bullish and bearish pointer is. It's only for daily, weekly, and monthly charts. It is not for intraday charts. Only for daily, weekly, and monthly charts.
The big ones, yeah.
Yeah.
All right, great. Here's another frequent question, but just a great question because it's very important. Also about Take Back Friday. Is it don't hold any positions over the weekend, or is it don't take out any new positions on Friday? Thanks. Looking forward to it.
Okay. I'm not going to tell people, how to trade as far as that's concerned. If the report says buy, then you should be buying. If it says sell, then you should be selling. As a rule of thumb, myself, just because I'm really big on quality of life, I try not to initiate new positions on a Friday. Mm-hmm. Typically because it's not necessarily going to be a real move. Meaning it could all become erased come Sunday night. It could all be erased rather quickly. Because Take Back Friday is usually it's an old Wall Street thing. Mm-hmm. And because times have changed so much, Take Back Fridays are starting to change too. Take Back Friday traditionally was because traders, especially the floor traders, that's when they want to go out drinking and partying Friday night and into the weekend. So they'll take profit, they'll close out some positions so they can have some spending money to go and party on the weekend. So if a market's been up all week, you'll see it pull back on Friday as people are profit taking. And if the market's been down all week, you'll see it go up because people are profit taking. That's all it means.
They're just spending their money.
People are just taking profits, closing out positions. But because now we live in a new world, and we can't ignore the dynamic of this new world that we're seeing. The Take Back Friday, the traditional Take Back Friday rules almost no longer apply. Instead, you see continuation patterns happening on Friday now, and you see more and more people placing new positions, trying to get ahead of everybody else on Monday. So you got people betting that a certain pattern is going to continue into the following week. So you got a little bit more jockeying for positions now on a Friday. So because the pulse waves, don't take a break, they come out, whenever the markets are open. I've decided just to stick to the pulse waves because that trade that you don't do could be the one that really pays you a lot of money. And if you were down in your account, it could get you back into black. So now, because times have changed, holding a position over the weekend or entering a new position may be a viable option. But now let me give a disclaimer. Because people are going to take my words out of context. What I am saying to you, everything I just said to you, does not apply, I repeat, does not apply to stocks. It does not apply to equities. It doesn't, do not apply to equities. Equities is a different animal. There is always risk when you're holding equities over the weekend because you won't be able to do anything about it until Monday, 9:30 a.m. Eastern Standard New York time when the opening bell rings. However, if I'm trading futures, forex, or crypto, I can do something about it come Sunday night when the market opens. You dig what I'm saying? So if the market gaps down on Sunday night or gaps up, I can do something, especially if it does it in my favor. So if I'm holding a long S&P 500 futures position going into the weekend, and when Sunday night comes, the S&P jumps and gaps up 20 points, I'm dancing. See what I'm saying?
Yeah.
But if it gaps down 20 points, I don't necessarily have to panic because I have my stops in.
Mm-hmm.
See what I'm saying?
Yep.
And I can just as easily get taken out of that long position and reverse and get short. If the market continues to plummet into the Monday opening, while everybody's waking up on Monday morning and throwing up because they were long equities going into Monday, I woke up short. And if the market's down 500 points, I can just go ahead and say, I'll take my profit here. I'm good. While everybody else is panicking. See what I'm saying? So this does not apply to stocks. It only applies to if you trade futures, forex, or crypto, because you can do something if anything whack happens over the weekend. War breaks out, a nuke explodes, whatever.
Yep.
You can do something. An equity trader, nah, you're going to have to just deal with it when Monday comes. But with that being said, keep in mind too, the equity trader has an advantage that crypto, forex, and futures don't have. And that is you have a little bit more control of your margin and of your risk, all right, as far as leverage. As long as you are going into the weekend with a net long position in equities, then you don't have anything to worry about. But if you go into the weekend with a net short position in equities, then you have everything to be concerned about because you're going into the weekend with unlimited risk. If you are net short anything, you have unlimited risk, whether it be crypto, futures, forex, or stocks. I don't recommend going into the weekend net short anything. I always recommend going into the weekend net long. So I can be short the stock market by being long an inverse ETF. That's fine. But I'm not going to go into the weekend being short 1,000 QQQ ETFs. I don't think so. You dig what I'm saying to you?
You want to enjoy the weekend and not develop stress.
Right. So if you're going to initiate positions on Friday, that's great. That's great. I'm not telling you need to get out and take profit on Friday. What I'm saying, though, is you need to make sure you got your stops in. Put it that way. All right? To each his own. That's another feature I designed into the system. I give you the roadmap and the rules. But you can, once you get comfortable, you can use the system any way you see fit. I've had people over the years say, look, I just realized that if I do this and thus and so, that I'm better for my trading style. And they say, what do you think about that? And I say, more power to you. That's great. I'm glad that you found a way to use the system to your benefit. I got people that only trade stock options with the system.
Mm-hmm.
And then, they say, this is how I do it. And I say, that's great. I got people that tell me to this day, yo, Dex, I use the intraday price inflection point, the momentum trigger. I use that to enter and exit all of my trades. And I'm up 500%. And I say, you know what? Great. Because that's what I designed the indicator for anyway.
That's a cool way to do it.
Yeah.
Yeah, I love it.
So there's no right or wrong way to use the tool that I've given you.
Yeah.
Just take the power of the pulse waves and the rules that I've given you and let it be your guide. But you can, mix and match and do whatever you like, as long as you understand the risks of what you're doing and you're being smart about it and not being greedy or stupid. You dig?
Mm-hmm.
And don't overuse leverage. Manage your leverage, manage your risk at all times. I never trade without a stop loss. I don't care what the product is. I don't care if it's an equity, if it's a futures or forex or crypto. I will never trade without a stop. I just don't do that. But now, with that being said, there's always gray areas and rules, everything. So there are times I will trade without a stop, and I will do that if I'm net long in equity.
Mm-hmm.
I might decide that I'm not using a stop because the equity that I'm trading is now valued at 3 cents. Why would I use a stop for 3 cents? I don't need to use a stop. It's trading at a penny. Or 3 cents. Really? I don't need to stop. What is it going to do? Go to zero? It's going to drop 3 pennies on me? Okay, fine. See what I'm saying?
Mm-hmm.
There are times where you can make that decision. Say, I don't need to stop. Because what's the worst that can happen? I buy 100 shares of Microsoft and it goes to zero. Is Microsoft really going bankrupt? The only way Microsoft goes to zero is if they're bankrupt or someone blows up the headquarters or something stupid. Some unforeseen freak thing.
How? Yeah, it's just not.
Exactly. So the worst that can happen with equities when you're buying equities, I can lose everything I used to buy the stock. So if Microsoft is trading at $25 a share and I buy 1 share of it, what is my risk of loss? $25. That's it.
Yeah. Mm-hmm.
So I may say, I don't want to stop. I'm just going to hold this 25. I'm just going to hold this 1 share, and whatever happens with it, I don't care. I'm just doing that. Well, you're not trading at that point. You're investing, and that's a whole different philosophy. So we're traders here. I trade. So I use stops for everything. I have a short-term horizon. I don't want to hold Microsoft at $25 a share, and it drops to 20. I'm uncomfortable now. I don't want that to happen.
Yeah,
I want to get out because if it hits 20, I think it's going to 10. I would like to be short, probably.
Excellent.
See what I'm saying? So hopefully I've answered everyone's questions on that one.
Very.
I try to be as thorough as possible. You
are. And with that, here's what I'm going to do. I'm going to tease a question for next time because I know we're doing this again, probably next Friday, if not sooner. First question we're going to answer next time, Dex, if you don't mind. How to find a trend line. That's what V-Dub's asking. So you talked about trading toward the trend line as a target. So I think that's a good one for us to pick up with next time. Thanks, everybody, for your great questions. Thank you, Dex, as always. Excellent information. I can see in the comments people are really appreciating it. Go to pulsewavetrading.com. We have 3 wonderful memberships for you. One of them's for free. You can test drive some of our educational content. And then we have 2 wonderful memberships. We're really proud of the pricing. We're proud of what you get in each package. $199 right now to be a pro at PulseWave Trading. Get access to literally thousands of tradable reports. If you're not ready for that, $49 a month for our Partner 21 membership. Absolutely excellent membership. I think it's 3 cryptos and 7 forex pairs that you could trade. Great stuff. All 3 of those forex pairs, all 3 of those crypto pairs are tradable on Bybit.com, on Bybit, the Bybit exchange, on a bunch of others in terms of the futures contracts. So it's very useful. And we'll be back. Go to pulsewavetrading.com. We would love to have you in our Slack room and get you access to these incredible reports that Dex has made with such love and intensity and dedication for decades now. So
I work on it daily too. Every day I'm slaving away, making sure that I'm giving everybody the most up-to-date, accurate information as possible. And with that said, I just want to give a shout out and a big thank you to my main man Frank here for all that you do behind the scenes. People don't know how hard you work. You slave away. Also, shout out to my girl Jen, all the great work that you've done, and none of this would be possible without you. And also, I want to give a shout out to my main man Kramerica in the our moderator in the trading room, and my man William HK Trader, who's been my ace boon coon from day one, and to my man Duck, who is my technical director. My main man Duck, who has helped me whenever I need it. Thank you very much to everyone. Everyone's great, and thank you to all of our subscribers as well.
HK is going to send us a bill at some point for all.
I know, right?
Free info he gets.
I know, right?
We won't even tell him. We'll just make it a supplemental subscription. You only get to read his stuff for like extra money.
I know, right?
All right. Thanks, everybody. Thanks, Dex. Have a great weekend, my man.
All right. Peace out.
Take care, everybody.